We have been talking about Redbox stock here on this channel for the last couple of days, if not the last week, and we have hit the rally on the head, ladies and gentlemen. But I do think there is still a lot of potential with Redbox stock this week for even an intraday trade. This stock has 226% short interest, and actually they are adding options up to the $28 strike every single time this tends to happen in history. You do see a bullish reaction. Think back to AMC stock when AMC went over 20 and there was no more options left. Well, what happened? We got to the 40s, and then what happened at the 40s? It went to the 65s, and then those got extended out to the 145s, right? So this tends to be a very, very good sign. And that's what is happening this upcoming week. We already have the options to the $28 strike that have been implemented. So I want to go over the information with you guys, go over really at this point how I personally am going to trade Redbox. Now, if you guys want my up-to-date commentary, if you guys want my thoughts on Redbox, what is happening, if you want access to all of my trades, which we did put on multiple trades on Redbox stock, held them over the weekend, so it looks very promising. If you guys want access to all of that information, link down below in the pinned comment or in the description of this video, whichever one you prefer. All of those links, they do work, and that is going to be for the trading group. So let's talk about this situation. So Redbox on Friday went up about 39.49%, very volatile overall. We actually hit a high of 1470, came down to close the day at 1320, plus an additional 47-cent move in after hours, up about 3.56%. So definitely seeing a lot of strong momentum on Friday, a very strong close. But I want to point out this fact. This is not a short squeeze kind of rally. This was not explosive in the way that short squeezes work. When a stock that has 226% short interest actually sees a short squeeze, you know it's a short squeeze. There was not one volatility halt. There was no pressure for the shorts to actually eat up that order book, to get out of their positions, because yes, there's an order book behind Redbox that could be eaten up if shorts had to get out of their short positions. That's where you're going to see those volatility halts, right? And when the short interest is 226, almost 227%, there's no way you're not going to see some degree of a short squeeze. That's simply how it works. And especially when they start to add options to the option chain, that can get very, very bullish. Like expiring June 17th, you now have up to the $28 strike options that are now on the option chain. That is incredibly bullish. And considering the fact we're only at $13.67 per share, even if, you know, Monday or Tuesday is a red day, I think there's a lot of potential for a weekly swing trade here, considering the options are not that expensive in the grand scope of things, right? An $18 strike at the close of Friday is $75. If Redbox went to $28, that would be a $1,000 option. That would be over a 1,000% gain. Now, obviously, it's not guaranteed to go to 28, but typically when you see new options getting added to a short squeeze kind of trade, you tend to go to that higher end mark, and then you tend to see more options get added even on top of that. Look at DWAC, look at Inspirato. Some of these stocks can go from 10 to 100 even on a daily basis, and that would be the short squeeze, and that would be how I would trade it, is just like that, getting in, getting out. Now, if you wanted to throw a small amount of money around, obviously, you know, before you actually see those intraday moves, before you see the volatility halts, might not be a bad, you know, a decision in my personal opinion, but you just have to be ready to lose all of that potential money if you're just going to gamble that potential money. I'm more so talking about if you wanted to be a little bit safer, obviously there's nuances here, but you're probably going to see a short squeeze sometime this week, and you're probably going to see the price of the stock go up hundreds of percent at one point this week, as those shorts have to eat up the order book. That's essentially what it is. When you got to get out of your position, when you have to, they're going to have to eat up that order book probably from 13 to 20. Somebody else is going to have to eat up that order book to from 20 to 30. That's simply how it goes. Yes, will expect to see volatility halts, and we will expect the price of the stock to do something along those lines. Obviously, I'm not a fortune teller. I'm not here to guarantee anything. We have the Fed meeting on Wednesday, and it's going to be very volatile overall, but you kind of seen an inverse reaction between the markets and Redbox. When the markets would drop, Redbox would actually go up, and then vice versa. So in some way, shape, or form, some weird market we live in, it was actually a bullish thing that the markets were down so much on Friday, and it actually made Redbox go up dramatically. So the short interest, almost 227%. We got that. 4.42 million shares that are sold short. Cost to borrow minimum 726.91%. Cost to borrow average 832.19%. Cost to borrow max of 951.91%. There's no way that you can stay in your short positions with these kind of numbers. It is absolutely impossible. It's not going to happen, and there is likely only just a couple hedge funds that are behind this 4.5 million shares that are sold short. So I'm very encouraged by that, and I think you could really see some hedge funds get blown up if this stock did make some kind of parabolic move, say from $10 to $100 per share. So I think it's very exciting, and that's why I bring you guys this information. Yes, I do have trades on this. Yes, I do have like $500 on this trade. Potentially could make a lot of money, potentially could lose $500. That is the risk that you must be willing to take if you trade these short-term trades. And like I said, I'll say it again, I think the less risky way to trade this is once you can confirm the shorts are actually covering, then you can make a really, really nice intraday day trade. Now, you guys see this option activity, right? It's not just me. Look at these options that are coming through. For these were for the June 10th expiration, which was obviously on Friday, and a lot of these did, expire in the money, did expire with value, and there was a lot of options that did go through, especially towards the end of the day. For the June 17th expiration, look, 1558, 2 minutes left to market close. These three orders came through for about $400,000. 1553, and just so you guys know, markets close at the 16, is this military time? I'm not sure exactly what time Ortex uses, but at 16 the markets close. So look at all these trades that came through, like massive amounts of trades even in the last hour that went through for Redbox, and all of these positions are calls, not one single put. So you're likely going to see a major gamma squeeze as well for Redbox stock. Now let's go ahead and take a look at the option chain as well. And we can see for June 17th, you do have a lot of calls that are currently in the money, right at the $13 strike, about 14,000, and then you don't have that much option activity until you get to the $17 and the $18 strikes. But I do think you're going to see a lot of optimism due to them actually adding options to the option chain all the way up to the $28 strike, typically something that is seen as a very, very bullish thing. Now, if you guys have not understood so far where I currently sit as far as the actual price target, how high this thing could go, you could go, to $100 per share. That is very, very possible. Now, would I wait to $100 per share to take profits? Well, absolutely not. If I put $500 into this trade, or if one of you guys did something similar, you want to get your initial investment back without selling, that many contracts, right? If you buy 5 contracts, for an example, or 10 for $75, spend $750. If you could cash out 2 or 3 of those and get your $750 back and hold the rest for free, that's really what I would look to do here. And if that's potentially sounds interesting to you, and that's a good way to trade, maybe it is right for you to come join us in the trading group. But just be prepared that, anything can happen, especially with trades like this. But we're definitely in a very strong situation overall. And something I find very bullish at the same time is we have very low volume still. Even back here of this was May 2nd. You've seen 160 million shares trade hands. Well, on Friday, you only seen 75 million shares trade hands, and we are hitting higher highs. So we're seeing half of the amount of volume that we seen back here May 2nd, but we're going up a similar amount. So what does that mean? If you see more volume head into the stock, higher and higher volume at this point, which is very possible, we're not even close to peak potential volume for Redbox, that's where you could see shorts get squeezed out in a very, very massive way. But don't be confused by this. I still think AMC is the #1 trade. Redbox is a very, very interesting prospect that could reward people very, very nicely, and that's why I have to bring it to your guys' attention. There's no other way to put it. I have to. That's my obligation to you guys, to bring you guys this information, show you guys what I'm doing potentially, how to trade these kind of scenarios, how to make money to better you and your family's financial futures, because that's the ultimate goal here. Forget what stock it is, forget what trade it is. I don't care if you make $1 million playing a coal stock or playing a retailer or Macy's or Best Buy or anything else. I really don't give a shit. The goal is to make money, and I think this is potentially where you could make a lot of money, especially with these options. If you do head close to that $28, $30 price like the option chain does suggest is possible, you can make thousands of dollars per option. But just be mindful, options typically do expire worthless, about 80% of them, so keep that in mind. That is the risk when you are trading options. So I think on the higher end range, $100 certainly possible. What I would more so expect would be something in the $30, $40, $50 range. I think that's more reasonable, but you could get something that is even bigger than that. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. I will see you in the next one.